You heard Jim Cramer. He believes that Kamala Harris is the best candidate when it comes to big tech and also just international business for companies that do business here in the U.S. and also overseas. Agree with them? And do you expect to see any commentary about the presidential race coming up in earnings from big tech or any other companies?
You know, Frank, I do agree with Jim, but I think investors should be very careful about trying to, place bets on who they think is going to be in the White House next. And I think, investors should really focus on earnings and what's going to happen from between now and the end of the year. I would really, focus investors on positioning for a lower interest rate environment. And we're starting to see that trade happening now as we saw small caps really rallying against, mega cap tech selling off recently.
All right. We're going to be talking more about that small cap trade throughout the show, but it sounds like you're a believer. You're a believer in that rotation somewhat out of mega cap tech, but into these other areas that were quote unquote unloved.
I am, and our firm has been, on the side of a no recession all year long and also for last year. And so we think cyclicals, sectors such as industrials, financials that we've seen popping lately, even real estate. I think public real estate was, hit hard by higher interest rates, and you're seeing real estate rallying. In fact, I think over the last month, the best sector in the S&P 500.
All right, let's get to those tech earnings coming up. As always, or at least in recent months and years, communication services and tech, that's supposed to be the leader when it comes to earnings. Big upside moves year over year forecasted. But I want to ask you, what's more important? Are the numbers more important or is the guidance more important? Basically, this quarter, does the AI story, does it have to show improve? Or can the guidance tell a story that investors can believe in the long term?
Well, I think the guidance is really important because obviously we've had a great rally so far in the Mag 7, but that's also been backed up by great earnings. And so, but earnings are supposed to slow down in those large companies, and the rest of the market's supposed to pick up. So I think there's some reason behind, besides just the interest rate environment looking better in terms of being lower, inflation going lower, and rotation with fresh money going into some assets, going into assets that are looking for value. Because I think, a lot of people are worried that they're a little bit late in the game buying into the tech trade.
Back to tech. We're showing the estimates right here. Tech's supposed to see earnings 17% higher year over year. Comm services 22% higher year over year. That's pretty lofty. Does comm services tech, do they have to beat, possibly exceed to keep the rally going? Or if it's just close, is that good enough with good guidance?
I think right now, it's got to be really good with also good guidance and forecasting going forward with the prices that we have right now in terms of valuations. And so I think investors are very, concerned about the valuation side of that large tech trade. And so investors, again, are looking for value in other parts of the market, such as small caps. We're finally seeing small caps rallying against the rest of the market. And these sectors that were really beaten up because of higher rates coming back, such as I said, real estate, financials, and other cyclical type sectors.